Welcome back. As I said on this channel, the market would be dropping, and it appears that we are in the midst of the major market drop of 2024. Now, in my videos dating back to about October, that is when I predicted that we were going to see a run up into the Bitcoin halving time frame. I honestly thought that we were going to capitulate before the Bitcoin halving, but now that we're after the Bitcoin halving, it appears the capitulation is going to be happening after the Bitcoin halving. And so today in this video, we're going to be exploring not just crypto, but also stock market, the bond market, the dollar index, and understand how this all comes together and why we were able to call this market drop. And we're also going to discuss how much further down we're going to go, how much more bleeding the market needs to take, and when we will see the turnaround and start the bull market. Because as I always explain on this channel, when the market thinks we're going higher, typically we go lower. And when the market thinks we're going lower, typically we go higher. Typically it's opposite what the sentiment is in the market. And so in today's video, we're going to be exploring all that. I'm going to show you guys the charts. We're going to be exploring all of the metrics to help us understand how this market operates. And remember, nothing I say is financial advice. These are just my opinions, strategy, and thesis on the market. I could be wrong about anything and everything that we discuss. So do your own research, hit that subscribe button. That way you never miss a new video, and give the video a free thumbs up because thumbs up are free. Crypto and stocks are not. And if you want to help support the channel, super chats down below, or you can click the join button to learn more about becoming a channel member. Now, we have seen the likes of NVIDIA go from $1,000 and basically almost a $3 trillion market cap down to now $750. This is a 25% drop. This is a major drop, especially when you're talking about these big mega cap cryptos or stocks. And so NVIDIA, Tesla, look at the 6 month on Tesla, right? It went from $260 to $140. This is almost half, right? And if we zoom it out even further to the 1 year, you can see in July of 2023 until now, we're down 50%. And a lot of people are potentially looking at these drops as life-changing, generational wealth creating opportunities. Remember what I always say, whenever capitulation does occur, remember back to when FTX collapsed and Bitcoin dropped to $15,500. It only stayed there for a few days. And then everybody was so distracted with who is next. Is it Grayscale? Is it Binance? What's going down? Is it we're going to have another collapse? No, FTX was the collapse, and that was the greatest opportunity of the cycle to buy. And I think that we are in the next greatest opportunity in the cycle to buy now. The reason why is because if you zoom out Tesla even further, you can see we're at multi-year lows. And granted, maybe Tesla from a financial standpoint is dealing with some stuff, but I would never bet against Elon. Elon already said, wait till August at their earnings, and they're going to be talking about robo-taxis or something like that. And just on the speculation alone, the price of the stock can double. And that's without the Federal Reserve jumping in and cutting rates. If the Federal Reserve jumps in and cuts rates, and he says something about the robo-taxi, where do you think the stock is going to go? You think it's going to stay at $147? Please. Anyway, that's just one example. And we're going to come back to Tesla in a minute. Apple is another great example, right? Apple is 6 months from $200 down to $165. MicroStrategy, which we talk about on this channel all the time. We basically called the top of the market at $2,000 on this channel. I said, guys, this is way too frothy. Why? Because since February, right around this period, when we were about $600-700, this is when we started to see massive sales every single day from Michael Saylor. Every day, almost every single day for the last 2-3 months, he's been selling every single share of MicroStrategy he owns. And so how do you think that's going to affect the stock market? How do you think that's going to affect MicroStrategy? Well, if you're not paying attention, you're like, well, it's going higher. He's selling his stock and it's still going higher. We went to $2,000 and he's selling his stock. I saw that as oh shit, I need to get out of the stock. Because if the CEO is selling all his stock, every day there's going to be a drop in the price, significant drop in the price. And we've already seen it from the peak to now. It's come down 40% in just about a month. Are we done? Is it going lower? Is it going higher? Well, we're going to be discussing all of that in today's video. So make sure you guys are subscribed and give the video a free thumbs up. Now, to understand what is going to happen in the crypto markets, what's going to happen in the stock market, you can't look at those markets. You have to look at the debt market and the dollar index. The dollar index gives you the relative strength of the dollar. So think about it. If you have $100, but that $100 is only worth $10, you can only buy maybe, maybe a few bags of chips, right? But if it's $100, you could buy the whole case of chips. Now, let's say that $100 is so strong that you can buy $200 worth of stuff, like it has the purchasing power. That is the idea. When the dollar index is higher, the dollar is stronger. So you need less dollars to buy those same things, right? So when the dollar is strong, it's cheaper to buy gas, cheaper to buy groceries, cheaper to buy cryptos, cheaper to buy stocks. And when the dollar is weak and it's lower than 100, which we've been, typically it costs more to buy everything because those dollars are cheaper. They're valued different. Most people don't look at it this way because they just look at a dollar as a dollar and they just look at the prices are changing, but the prices are changing based on how strong that dollar is. And so understanding that when the dollar index goes up substantially, typically you'll see asset prices go down substantially. And so let's pull up the 1 year actually. So this is the 1 year dollar index. Okay. And so in July of 2023, typically the markets, if you look at the crypto markets, for instance, let's pull up Bitcoin. We'll pull up the 1 year and look at where it was in July of 2023. This 1 month, this is the 1 year. So July of 2023, we went from June $25,000 Bitcoin to July $30,000 Bitcoin. And it basically stayed flat, right? So maybe Bitcoin is not a great example. Let's look at Ethereum maybe. And let's look at Ethereum's chart on the 1 year. Where was it in July of last year? In June, it was at 1,700. And in July, it was at 2,000, right? So pretty big jump right there. And I'm sure if we look at some of the altcoins, they were also similar to that. But the other thing that you want to look at here is the Bitcoin price. If you look at December, so December was the last time that the Dixie was under or very close to $1. You can see December 28th. And so if we look at Bitcoin on the 1 year and we look at December 28th, effectively it was right around the peak of that little area of time, right? And so the other thing that you want to look at in comparison to the Dixie is the 10-year yield. This is the debt market. And so typically when the 10-year yield is going higher, typically the stock market goes lower. And when the 10-year yield goes lower, typically the stock market goes higher. And so if you look at these charts here, you can see that the peak here was in, it looks like November, December. And the peak here was around November, December as well. The low point was around December, January in 10-year yield. The low point was December, January. So right now, it appears these are very correlated for the most part, right? They may have little dips here and there. You can see that dip right there, that dip right there. And so it's not an exact science, but generally speaking, when you're seeing the dollar index going higher and the interest or the bond yield going higher, it's typically a little bit of a bearish scenario. And that's playing out. I mean, like I said, we saw NVIDIA drop substantially. NVIDIA unveils a new buy point, an AI deal with Google, but worries still linger. When they're still announcing like these amazing partnerships or mergers or just integrations, and there's no movement in the price anymore, typically it's a bad sign, right? And you'll still see announcements from companies, from crypto projects. They'll say, oh, we're doing this now, we're doing this now, we're doing this now, and the price keeps going lower. Typically, again, the trend is your friend. When the market's going down, it's very hard to fight that. And so I have predicted for many months on this channel that we were going to have a capitulation point, and I think that we're approaching this capitulation point. Now, keep in mind, the Federal Reserve is going to be having their next meeting from when I'm recording this video. I'm recording this a few days after the Bitcoin halving occurred. So that was in end of April. The Federal Reserve is meeting April 30th and May 1. There is a high potential that what we are going to see into the Federal Reserve meeting is that the markets are just going to keep dropping. In my view, this would be a very positive move for the markets because it will flush out a lot of the leverage. The markets will create new buying opportunities for people like you and I who are ready to deploy capital. And, I think that if let's say from the halving to the Federal Reserve's meeting, which is about 2 weeks, let's say the market keeps dropping and then the Federal Reserve comes out and says, we're not going to lower interest rates. The market will keep dropping into May. And that may lead us to a point where the Federal Reserve has to do an emergency meeting and an emergency rate cut. Because guys, no matter what the macro picture is, the Federal Reserve is not going to let this market crater. They'll let it drop by 50, 60, 70, 80%. It's not going to go to zero. They will not allow that. And so they are going to drop rates at some point. It's just a matter of when. I think the more this down trend continues, the more likely they're going to do an emergency meeting. But even if they say we're probably by our next meeting we're going to lower rates, that is probably going to be enough for the market to go back up. Or the Federal Reserve may say next meeting we're going to cut rates if everything continues the way that it is. Whatever they say, whatever the Federal Reserve says, I think in the very short term, it's going to be bullish for the market regardless. Even if they don't raise rates and the market falls lower after May 1, that's okay because the Federal Reserve is going to come in here at some point. I mean, look at NVIDIA. NVIDIA is already down 20% from $1,000 down to $762, and people are freaking out. And we haven't even flushed leverage yet. Leverage is going to bring this down to like 400, 300. Tesla, we're back at 2020 levels, literally. Last time we were in the 140 range, besides this little dip right here, was back in 2020. And mind you, this little dip, it occurred for 1 month. That's it. We went from 300 in September to 100 in January, so 3 months dip, and then we were back at 280 by July. That was in a 5-year time frame. So these moves to the downside, they're going to correct back to the upside. The idea is that you want to somewhat time when the market's going to stop falling. You may not be able to time that accurate, but even if this is the bottom, let's say 150, and you buy at 160 or 170, but the trajectory is 300, it's still okay. Like, you don't have to call the bottom exactly. You have to look for these opportunities where the market is dropping substantially. Now, whether Tesla is going to have like a year or two of downtrend, I don't know. But I would imagine they're going to keep Tesla elevated in the $500 billion to $1 trillion range for a while at least. NVIDIA, they're not going to let drop. And there's no real, like if the Federal Reserve starts cutting and this makes the rate of borrowing cheaper and small businesses start getting more money flooding into their operations, this could potentially create an environment where you're going to see more AI compute getting built and they're going to need more chips, and then NVIDIA is going to go much higher. Tesla, on the other hand, the stock keeps getting cheaper, but meanwhile, Cathie Wood, her ETFs keep buying it. And this is something to keep in mind, right? You want to watch what these ETF issuers are doing because they are Wall Street. These are actively managed funds. Now, some people don't like Cathie Wood's investment thesis and strategies, which I get. But the way that I look at it is, if she's buying Tesla now in her ETF, they believe that Tesla is still going to go higher in the longer term. So being 150 right now, it's not really going to mean anything in a few months or in a few years. And so that's, I believe, why they're buying it, and they're actively managed fund. And it's not just those. Apple also, right? We've seen Apple come down from $200 in December, down 15, 16%. This is a huge amount. This is $500 billion reduction because Apple was over $3 trillion market cap when it was at its peak. And now we're at $2.5 trillion. So that means it's dropped $500 billion in value. That's a lot of valuation. Is it going to go down further? Probably. Probably. If I'm not wrong, Apple is the largest holding of Berkshire Hathaway, and I believe that they started selling some last year. And then you have Meta, which is completely different, right? Because Meta has been going straight up. There's been almost no correction in Meta or Facebook, right? But what is Facebook actually creating? Nothing, right? Maybe they're coming from an AI perspective because Meta and Facebook, they have so much data on their customers that they can use that or harness that to train large language models and AI for their compute. That's possibly why we've seen Meta just going straight up. You can see it bottomed in November of 2022, right at the market bottom, and it's been going straight up ever since. No correction. This stock looks very different than Apple, right? Look at the 5-year on Apple. It's been kind of slower on the uptrend. Look at Tesla on the 5-year. It's been on actual downtrend. Look at NVIDIA on the 5-year. It's been basically going straight up as well. So Meta and NVIDIA are looking basically the same. Are these two due for a correction? Possibly. But these are also some of the largest platforms, not only in the country, but in the world. So maybe they're just going to keep pushing them up. And then you have the likes of MicroStrategy, which you have to remember, like I said at the beginning of the video, their CEO has been selling his shares of this stock for a while now. And people are still extremely bullish on MicroStrategy. I'm not bullish on it, but when the CEO keeps selling, $300 million in shares, is the market really absorbing that? Who's buying at these high levels? And it's not just MicroStrategy's CEO that's selling their stock at this level. A lot of executives have been selling their stock at these levels. It's very easy to see that. You just go to MSTR Insider Sales. You can do this for any stock, and it's listed on their NASDAQ page where you can see the date, how much they sold, if options executed. Typically, like executives, they get options contracts. They get the stock options so they can buy the stock at a certain price. So he bought it at 121 and then immediately sold it at $1,178. So basically made $1,050 on 5,000 shares. And he's been doing this for the last few months. You can see this on any stock. And there's been a lot of insider sales. JP Morgan CEO, I think some Apple executives and the like. So there's a lot of data to take in, right? And nothing in what I'm saying is an exact science because it really comes down to the Federal Reserve and what the Federal Reserve is going to do. That's going to affect the 10-year yield. That's going to affect the dollar index. And it's going to affect the crypto markets. But I personally do think that we are going to see Bitcoin drop before it goes much, much higher. And I could be wrong on this. I've definitely been analyzing my portfolio analysis every single day on offline off this channel. But I mean, there's been times where I'm like, maybe we're not going to dip. But I can't see that happening because I don't think the Federal Reserve is going to start cutting rates until the broader market and economy have major issues. And they said this, right? The Federal Reserve has said they need to see unemployment pick up. They need to see more people get laid off. They need to see more stress in the housing market. And until they see this, they're not going to cut rates. It's almost like Jerome Powell is begging CEOs to lay people off when he says that, because that's what they're waiting for. And so we've seen some drops in these markets. We've seen some layoffs, but we need to see like almost 2020 level where these companies were just laying off like wide department-wide layoffs, or entire companies are just getting laid off, major downsizes in a very short period of time. And this may occur in May, depending on what the Federal Reserve does at the beginning of May. I recently went into a store and their company's bankrupt or is about to file bankruptcy or already did or something like that. And I asked the employees, like, what is the status? And they said, we don't know. We're waiting for this date to see if the company's going to stay open or shut us down and we're going to lose our jobs. And I was like, oh, that's interesting. So they don't even know. And the person's like, no, they don't. Even though they probably do know, they're just not telling their employees. But what were they waiting for? Like, were they waiting for just another bailout? Were they waiting for the Federal Reserve to start cutting? That's potentially what they're waiting on. Because maybe these companies, if there is the Federal Reserve easing and making borrowing cheaper, these companies can borrow their way out of bankruptcy. But if the borrowing rates are too high, they can't. And so maybe that's what they were waiting for. They were waiting for the Federal Reserve, and the Federal Reserve didn't come out and lower rates by then. So then they just said, we're shutting down your jobs. So it's a very interesting kind of dynamic that's going on in the markets right now. We're told everything is great. The Federal Reserve is saying there's some metrics that don't say everything's great, but the job market's still doing great. Record low unemployment, which is a flawed metric also, because a lot of these people who leave their jobs or get laid off or get put on severance, they don't collect unemployment in the immediate term that they're getting laid off because they have a severance package. And sometimes those severance packages say they can't collect unemployment until a certain period of time. And so that delays all of the data. So by the time the Federal Reserve is making a decision to cut rates, the market's already dropped. And that's what we saw in 2020. The market started dropping in the middle of February. The Federal Reserve had a meeting in March. They said, we're not going to cut rates. And then the market kept falling. And then they came out and said, okay, we're going to do an emergency rate cut. And then the market fell after that as well until they shut down the global economy. So when things start to spiral, they can spiral very rapidly, and that could affect all the markets, all the indexes that affect the markets, and most importantly, the debt market. So let me know what you guys think about this kind of conversation where we kind of explore a little bit outside of just crypto and kind of dig a little bit deeper into the data and the metrics of these markets and how they all flow with and without each other. Anyway, hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up, hit that subscribe button, and I'll see you guys tomorrow. Crypto on.